commodities are currently benefiting from ongoing political unrest. The super cycle is in full swing. Tell us about this one. And what I'm noticing is the steepness of this new cycle that we're in and how short it has been so far. There's a lot more to go when it comes to the amount of time in this.
Yeah, well, I think it's important to say that, another long-term chart starting in 1915, and you can see that well, actually, those trends, those bull and bear markets in commodities are really, they can take 10, 20, 25 years. And usually, and I mean, it's the nature of every bull market, the new top is significantly higher than the previous top. So
Yeah.
that would suggest that, well, we're not at the very, very beginning, like in 2020 of this bull market, but we're far away from the end of this cycle.
Yeah, we're
Now,
much closer to the beginning than we are the end. Yeah.
exactly. And I think, some commodities are kind of overbought or were overbought over the last couple of weeks, and it's losing some steam. If you have a look at copper, at also energy markets, some agricultural commodities, and so on. But it is obvious that, from energy to battery metals to precious metals to agricultural commodities, the whole Ukraine war is further disrupting supply chains and also very long-term established supply-demand patterns. Just one example, Mike. Now the G7, they are meeting up now in Elmau in Germany, in Bavaria somewhere, and they already had 6 rounds of sanctions against Russia, and now the newest ones includes gold. So actually, the G7 nations do not want to buy any gold from Russia anymore. Now, Russia produces, I think, 360 tons, and obviously, out of the G7 nations, the UK is the biggest trading partner because London obviously is a big trading hub, yeah, and it's the center of gold trading. Now I was interviewed by some journalists, and they say, well, is it positive for gold? Is it negative for gold? And I say, well, actually, it's a no event from my point of view. First of all, because of the high stock to flow ratio of gold. We've got more than 200,000 tons of gold around. So those 360 tons are, that's not really having an impact on the total supply demand picture. And the second is, if you know and understand the gold market, you will know that actually, the Indians, the Chinese, the Turkish, Dubai, they will be more than happy to step in and buy Russian gold. And we can see, how the Shanghai Gold Exchange is becoming more and more important, how important Dubai is becoming as a trading hub. So actually, it tells me, well, it is, of course, further disrupting the supply chains, but actually, it's not really gonna have an impact on the price. And secondly, I think it will negatively affect Western markets, so the G7 in particular. Um, and this is just one example how the sanctions work or do not work. And for us in this year's report, it was really important to explain the first of all the long-term cycles and how they're influenced. And I think the major driver of this cycle will be the lack of capex, the lack of investments that we saw over the course of this bear market. So now that everything is only about ESG, so everybody wants to be green, whatever their definition is. Everything that has to do with hard assets, with commodities, is bad per se, and therefore, actually, it's quite stunning how difficult it is for a very capital-intensive sector like the exploration, development, and production of raw materials, how tough it is to get access to capital markets these days. So from my point of view, capital costs will continue to rise. This is a consequence of ESG, and obviously there will be more focus on the commodity sector. But if you want to if you want to start a new copper project, it's going to take you 10 to 15 years at least to go into production. And normally at significantly higher production prices. So I think, as I've said, this cycle is not at the very beginning, but I think we are now like in the middle part of this big secular trend.
Yes, I agree. So the next chart, companies in the commodities sector have become true cash flow monsters, and that is something that everybody is looking for. So tell us what this chart means, how to interpret it.
Well, it basically shows that the companies in the commodity space. So this is only the large commodity producers, everything above a market cap of $1 billion US. They're producing huge amounts of free cash flow at the moment. I think if you, for example, have a look at Vale, which is a company that we still like a lot. It's the world's largest iron ore producer. The company at the moment has a market cap of roughly 100 billion, a little bit less, and they generated 20 billion of free cash flow last year. They paid out almost 10 billion in regular dividends and 10 billion in extra dividends and share repurchase. And it's not only Vale, it's also Rio Tinto, it's Glencore, it's the large cap oil producers, it's Royal Dutch Shell, it's BP. They're producing record amounts of free cash flow. They are still valued at very attractive price levels, and they're funneling cash back to their shareholders. So I think it is really this sector is really as much as a like a Buffett style value sector, and I think the companies really did a great job. They did their homework. They got their balance sheets in order. They refocused. They got leaner. So at some point, we will see crazy M&A activities again, but we're still far away from that. And at the moment, I'm just seeing pristine balance sheets. I'm seeing huge amounts of free cash flow that is being distributed to the shareholders. So as an investor, I'm feeling like a little kid in a candy store.
That's a good description. So, looking for cash flow, that is so hard to find in a stock that you can just purchase on it's especially the percentages that you are talking about. That is amazing, and that is exactly what I'm going to be looking for in the future.
At goldsilver.com, we have a price match guarantee, free shipping, and global storage options. Get the best-selling book, Guide to Investing in Gold and Silver, for free at goldsilver.com.